Actually, first of all, do a quick intro of IFA if you're not already aware. So our vision statement is a world in which wealth building is divinely inspired, equitable and seamless, with no one being left behind in our pursuit of happiness. Our mission statement is to become the primary institution that enables people to live their lives and conduct their financial dealings in a manner that is consistent with the Sharia and Islamic faith. Islamic faith-based objectives and values through direct advice and holistic education. So we have a range of services ranging from Sharia consultancy to Waqf and Zakat certification. We also have some we also have some podcasts that are coming out. There's one with Sheikh Sajid that's coming out soon, and we already have one with Ustadh Umer, and we'll be discussing our services and our vision and mission statement more in that. With that said, I'll hand it back to Ustadh Umer to start the lesson, and I'll see you at the end, inshallah. Assalamu alaikum.
Walaikum assalam wa rahmatullahi wa barakatuh. Jazakumullah khair. I'd really appreciate that introduction. Okay. Bismillah ar-Rahman ar-Rahim. Alhamdulillahi Rabbil Alameen. Wassalatu wassalam ala ashraf al-anbiya al-mursaleen nabiyyina Muhammad sallallahu alayhi wa alihi wa sahbihi wa sallam. Cool. We're going to jump into it. As you heard, it's all about investment banking today. I fairly regularly get asked questions about working in finance. The main area really is investment banking that people want to discuss. I thought we'll do a deep dive, and we're going to touch upon some kind of basic rules around kind of finance that we can try and apply as we go throughout, inshallah. Right? So, Bismillah ar-Rahman ar-Rahim. There are people can leave comments or questions in the chat box, inshallah. I'm going to try not to address them until to the end, just to make it a little bit more fluid in terms of the webinar, inshallah. Okay, so investment banking. Bismillah ar-Rahman ar-Rahim. Give me 1 second. I'm just checking something. Okay, alhamdulillah. Fine. There we go. Bismillah ar-Rahman ar-Rahim. We'll share my screen again. Right. When it comes to investment banking, hopefully everyone can see my screen. If there's any issues, let me know. Can one of the admins just confirm for me you can see my screens? Okay, guys, there's no
yeah, we can see
interruptions. Perfect. Just like a nice little thumbs up. Okay, so generally, investment banking will be split into kind of 3 areas. You have front office, your middle office, and your back office. Sometimes you've heard this. Back office is all of the support functions. So compliance, accounting, general IT, human resources. These are all the types of activities that will allow you to kind of support the main activity of the business. And they're generally agnostic or independent of what the actual underlying business activity is. So, for example, accounting, they're going to use accounting standards. It's the finance team. General IT, whether you are a trader or you're a secretary, you're going to need email. You're going to need access to maybe Microsoft or whichever type of operating system you use. And so general IT provide that. And then human resources, the same types of things in terms of getting people onboarded, doing their checks, etc. Now, this is important to understand that they are independent of the actual business activity. Then we have middle office operations. So these are the types of operations or the types of area of the business that are secondary to the main activity of the business. They're a little bit more connected, right? So, for example, treasury, treasury will use effectively the funds of the organization or the bank to maximize how it's used, making sure that there's money available to invest and so on and so forth. They won't be placing any of the investments that the front office do, but they will make sure, okay, that the money's there. Risk and technology. Okay, so risk, so my background is in risk. They will be working directly with the different areas, the different types, or the different departments within the organization to make sure that they are de-risking or managing the risk of the organization. And there's different types of risk. We've got operational risk, or what they call non-financial risk. Now that cuts across the entire organization. You have financial risk. Then you have subsets. You'll have legal risk, compliance risk, technology risk, cyber risk, data risk, and so on. And risk for each of those different areas, we'll look at what controls they can put in place to manage the risk. Okay, and I'm just giving you the oversight, and I'm going to cut into why it's relevant. And then technology. You have technology which is specific to the front office activity. So, for example, coming up with a system that actually places trades, that allows you to trade, right? That connects into your data feeds. For example, you may have heard of Bloomberg or Refinitiv, which is called Thomson Reuters. They provide data that needs to connect into your own system that allows you to place trades, etc. Technology will work on the specific software that does that. So as you can see, this is not back office. This is kind of middle office. This is operational. This is actually making the front office, the actual revenue generating part of the business, do what it can do, and to ensure that it's safe. So let's think of this from the point of view. Actually, no, we'll come back to it, inshallah. Right. So this is middle office. This is what's known as operations. Then you have front office, is where the meaty work really is, and where everyone wants to really get into. You have corporate finance, and then you have sales and trading. And corporate finance itself can be split into product groups and industry groups. Product groups and industry groups. And then sales and trading, and these are typically split into equities and fixed income. Now, generally, any type of work that you do, and banking is no different, especially investment banking, whoever brings in the revenue is king, right? So they have the most attention, they have the most money paid, etc., right? Because they are generating money. Without them, the organization, the bank, isn't going to be making any money. And so these are the main areas. So front office, this is where the action is, okay? Corporate finance, and then sales and trading. Now, I'll break into it a little bit further, and I'll come back to this. If I forget, do ask me about. Just remember, company structure for each of the middle or each of the offices. Yeah. So front office, middle office, back office, company structure. If I forget, do ask me that question because it's quite important. Okay. So corporate finance. It includes most of the prestigious roles in investment banking, right? So capital raising, advising on mergers and acquisitions. So product groups, for example, you can see there M&A, yeah, mergers and acquisitions, DCM, debt capital markets, equity capital markets, leveraged finance, and restructuring, right? So all of these fall under the corporate finance element. And I've taken a screenshot there from, I believe it was Goldman Sachs, when I looked at it. And they basically give some examples of the various business groups that you have, right? So often this will be labeled simply as investment banking or the investment banking division, IBD. And it's further split into product groups and industry groups. So industry or business groups, we see there, we've got client commission management, and that's a very, I don't know if you guys can read it, but I'll read it out for you. Client commission management, convertibles, credit, commodities, electronic trading, equities, global currencies and emerging markets, growth markets, interest rates, mortgages, prime services, systematic trading strategies, and transition management services. So when I was at university and I was doing economics, and we thought, yeah, we want to get into investment banking, all of these things were the things that would really excite us, you know, perhaps not mortgages and interest rates, but growth markets and trading strategies, transition management services. These were all parts of the bank that actually you think are really driving the profitability. So look, understanding each of these, brothers and sisters, is important. So when we talk about mergers and acquisitions, right? In effect, M&A investment banking, bankers advise companies and execute transactions where the companies sell themselves to buyers to acquire smaller companies, so what we would call targets, and divest or acquire specific divisions or assets from other companies. So M&A, it's like it's quite simple as it says on the tin, really, that you're either trying to merge. Very rarely is there a pure merger, right? Normally, it's acquisition targets where a company wants to expand into another market. It wants to take out maybe a rival, or it needs another business for to support what it's doing. I'll give you an example from Wahid actually. So we acquired iWills, who were the longest running Islamic Sharia compliant, or the Islamic wills service in the UK, alhamdulillah. And so for us, it was because strategically it made sense for us when we're dealing with investing on behalf of our clients, actually, that we want to create the entire financial ecosystem for Muslims to be able to manage their money. And that means also when it comes to wills, and your wasiya, that you do it in an Islamic way. So that was an acquisition we done. For the corporate world, obviously it's done at a much larger scale, and there's different strategies that they use. But at the heart of it is simply wanting to acquire another business, right? Over the years, you would have seen mergers and acquisitions. I often hear it for some of the big accountancy firms. You may have heard of, PwC, EY, Deloitte, KPMG. Originally, these were all separate kind of brands, and then they merged, etc. So PwC, Price Waterhouse Coopers, that used to be, Price Waterhouse, and there was a separate company called Cooper's Lybrand, and they merged, and then they became one. Deloitte's used to be called Deloitte and Touche Tomahatsi, if I remember correctly. So various things. There's a big thing with banks as well. Just before the financial crisis, there was a lot of acquisition talks for a Dutch bank called ABN AMRO and the Royal Bank of Scotland. At the time, there's a guy called Fred Goodwin. Look him up, Fred the Shred Goodwin. He was trying to acquire it, and he overstretched the bank, and as a result, it became a disaster, right? So mergers and acquisitions. Now, M&A is one. Debt capital markets. A debt capital market is a market in which companies and governments can raise funds through the trade of debt securities, including corporate bonds, government bonds, and credit default swaps, right? Therefore, if you're part of a DCM team, you're generally advising companies, sovereign, sovereign countries, sovereign wealth funds, etc. Not sovereign wealth funds, but sovereigns, agencies, and supranationals. That's organizations that sit above national level that want to raise debt. Really important point here. Raise debt. Raising debt means that an entity borrows funds and then pays interest on those funds, as opposed to equity, where the entity sells a percentage ownership in itself and pays no interest, right? So this is important. Debt, right, as is the name, it's all about debt raising, and you're going to help them leverage and borrow funds from various entities. So you're going to put it together for them to access. And we're talking about large amounts, maybe 100 mil, 500 mil, half a bill, etc. Dollars for borrowing, for them to then go on and do whatever they want to do with it, right? But you can see straight away from an Islamic perspective, this should be setting off alarm bells, right? And I hope everyone, as we're going through this, is thinking, would it be acceptable or not Islamically? Now, straight away, when we hear debt, and this is the first time I've used the term interest, right, in everything that I've said, you should be thinking, oh, okay, question mark. Now, other than DCM, you hear ECM, right? Equity capital markets. So you may think when you see equity capital markets, oh, maybe this is something like an IPO. An IPO basically is an initial public offering. and companies will raise often billions of dollars, if not hundreds of millions of dollars, in huge stock market debuts, right? So what happens generally, you've got a company that's trading, is privately owned, and then it lists itself on an exchange, and so the public and other institutions can buy them, and they buy equity in that organization. I remember recently Deliveroo tried to list itself, and it was a disaster. Sometimes you have companies that on their opening they become listed and they go through the roof, okay? And some do really, really well, right? And so equity capital markets generally is around issuing equity, issuing direct ownership of the company through equity, right? So like other capital markets teams at banks, ECM groups can be described as a cross between investment banking and sales and trading. If you're in this group, if you're part of an ECM team, you'll spend most of your time advising companies that want to raise equity capital, right? So a company typically gets to a certain size and wants to get larger, and so they need to raise equity. So they're thinking, wait a second, we're going to issue some shares, and we want to bring in capital, right? And we want to do it without borrowing. So you're not borrowing, right? You're issuing shares, right? And for those shares, you're going to get money in. So raising equity capital essentially means that the company sells a percentage of ownership in itself in exchange for cash, as opposed to raising debt, where the company maintains its ownership but must pay interest on the funds it raises. Now, that's an interesting point, you see, because with debt, the company has debt. There's no ownership on the company. If a company issues shares, it could get to the point that a lot of the percentage ownership of the company now goes outside of the founder's control. And so there's a danger that you have other people coming in and making a play on the company. But from an Islamic angle, just issuing shares and equity is something that can be permissible. And I'll touch upon the way that it can't be permissible, but generally it can be permissible. So straight away you should be thinking, okay, equity capital markets, this may be something I can look into. But it has to be said that, look, most people speak about ECM as if it's a single group, but actually, or generally, it'll be divided into a few different subgroups at most banks, right? So you'll have something which is like something called equity origination. This is where the team pitches companies on raising capital and then executes financing deals such as IPOs and follow-on offerings, right? So when you're in an equity origination team, there's a lot of research going on. You're schmoozing, trying to get the mandate to raise the capital, because you'll earn your money from fees from the money that's raised. Yeah. So you'll say, okay, look, inshallah, IFA is going huge places and they need some investment. So you'll contact the team, you'll go, you're part of the equity origination and say, listen, we want the mandate to raise the funds for this. We're going to go to some sovereign wealth funds, and we're going to get 100 million raised, and our fees for this are going to be 5%. Yeah, right. So you're going there, you're researching, you're going to go out, you're going to put together the prospectus, you're going to put all of that information, see where the value is, engage with the organization to make sure that the value is actually there. Is it worth what it is? That really comes into play where you come to actually qualifying the valuation and so much, right? And then also executing financing deals such as IPOs, etc., right? And then taking it hand-holding through to the actual execution. Now, the syndicate group, this group communicates with other banks to coordinate deal execution, since most equity deals involve other banks in order to distribute risk. When it's a very, very large organization that's going to be offering itself, usually you'll find that a number of different banks work together so that there's no concentration risk. Yeah, so they'll be working together. So syndicate, this is the one that actually coordinates with everyone else. Now, there's also something which is called the convertible bonds or equity linked group. This group helps companies raise capital, right, with convertible bonds, right? So with convertible bonds, which start out as debt issuances, but convert into equity if the company's stock price reaches a certain level. Now, this is actually quite interesting because when we look at it from a FIC perspective, um, you look at something that starts life as a debt, but then it becomes equity, right? So it starts life as a debt, but then it becomes equity, right? If the company's stock price reaches a certain, now why would they do this? Because it's more profitable for them. They realize, okay, if we do debt, and you look at it, subhanAllah, they're just doing it to protect the downside. They want to be as de-risked as possible, right? So they want to try and push the risk onto the other party as much as possible. But if there's upside, they want to take as much of that as they can. So, okay, if the company doesn't do well, it's a loan. You got to give us back capital plus interest. Oh, the company's doing really well. Forget our debt. We want shares now. Okay, so that's convertible bonds. Then we have leveraged finance. So at a high level, leveraged finance is similar to what you do in debt capital markets. Essentially, you provide strategic advice to companies on raising debt. This means pitching to current clients and prospective clients, executing debt issuances for clients, and working with other groups to provide critical market information and transaction case studies. Yeah. So again, you can look at the type of work. A lot of it is actually researching and then pitching. So you've got to be very good at your presentation skills, getting together your slides, looking at the data, how you're going to present it, doing deep dives into the information. However, the key difference is that DCM, right, debt capital markets, focuses on investment grade debt issuances that are used for everyday purposes, while leverage finance focuses on below investment grade issuances. So high yield bonds or leverage loans that are often used to fund control acquisitions, leveraged buyouts, and other transactions. So there's this amazing football team in the UK. It's called Manchester United. Right, it's phenomenal football team. It's just on a little bit of a blip at the moment, and you have all these other like noisy neighbours doing really well. But you could say the architect or part of the architect of Man United's downfall was when the Glazers came in. Right, so they came in, they bought out Manchester United, but they had leveraged finance. They borrowed the money, right? And you look at, subhanAllah, how they've made multiple times back what they've put in, and it wasn't even their own money. And the company's in so much debt, they've profited, and you can see how it can actually destroy an organization. So leverage, they use leverage finance for that. So here we go. Below investment grade means anything with a BA1/BB plus credit rating or lower. And that's something you can look up. It's just the way that debt is, investments are qualified. Standard & Poor's or Fitch is like a rating agency. And like I think AAA is obviously the best, and everything else is really bad. Now, just as a side note, you guys, when the financial crisis happened in 2007, 2008, what was happening was that junk kind of investments were being repackaged. And so I remember one sheikh saying that this was, the alchemists in the medieval ages, alchemy. What it started was with that alchemists would, their skill was to take junk metal and turn it to gold with, chemistry. So they were called alchemists. And what happened in the financial crisis was essentially junk investments were all put together and repackaged and given really high investment grades. So the underlying investments were terrible. And they were like, investments at the time, it was called mortgages that were given to ninjas. And I don't mean those people who are really good at kung fu. These were people in the US who had no income, no jobs or assets. Yeah, ninjas, right? So no income, no jobs and no assets. They're being lent money, right? Huge amounts of money. And obviously that's not sustainable. But all of those mortgages were put together, repackaged, and brought out as triple A kind of investments, man, when they weren't. They were terrible. They were junk investments. So here we go. Firms that are in that type of category of BA1, BB plus, they tend to be riskier than blue chip companies. So with less consistent operating results, higher leverage, and a higher chance of default, right? As a result, their debt issuances must offer higher yields than those of investment grade companies, because generally, higher the risk, higher the reward. That's the general kind of relationship between the two. The higher the risk, the higher the reward. So these types of companies, they can tend to have higher yields, but more chance of them flopping. So because of this difference, most of your clients in leveraged finance will be companies or private equity firms rather than sovereigns, agencies, or supranationals. Common use of debt for leveraged finance includes leveraged buyouts, right, which I mentioned earlier. Leveraged buyout, a private equity firm uses a combination of cash and debt to buy a company, improves it, and then sells it again. It's like house flipping on a much larger scale. So what happens is private equity, they'll see a company they want to buy. So we'll give some money and we'll borrow some money, we'll buy it, we'll try and improve the company. What that means is we look at the different parts of the company which are profitable. Okay, we like Umair's department, alhamdulillah, makes lots of money. Bang, we're gonna, keep that one. Ammar, yeah, it's not making too much money, it's not doing well. We're gonna cut that out and chuck it away, right? We're gonna offload it, and then we're gonna keep this lean organization that's really profitable, and we've got rid of everything else, right? That's how they work. And this kind of building, selling off parts, etc., stripping it down. It's vulture capitalism, is a way of doing it. I'm calling it. Now, in M&A, right, a company identifies another company or business unit it wants to acquire. It raises debt to do the deal and then holds the target for the long term, right? So that versus kind of like a PE buyout. Capital expenditures, just so you know this, if a company wants to build a new factory or develop a new asset that's not part of its everyday business operations, it may need to raise debt to do so. And that's you're looking at how it goes on to raise debt, going back there to debt capital markets. Leverage recapitalization, the client wants to raise debt to repurchase shares or issue dividends, right? Again, it's now the company's sold shares over time. Now, wait a second, you think it's going to start doing well. They wants to repurchase those shares, or the share price has dropped and they know the value and they want to buy it then. Refinancing. Again, look, if a company's debt is about to mature, it almost always raises new debt to pay off and replace the old balance. Now, this is something really important, brothers and sisters, right? There is this kind of carousel of debt that's just moved on and on, right? So when we talk about a debt maturing, that means that when it comes to the end of its term, so if a debt is on a 5-year term or a 10-year, for example, maturing means that it's got to be paid back. So over the years, interest is being paid on it, and then the capital needs to be paid back, right? And so often, if it depends on the economic cycle of the company, it may not be in a position where it can pay it back, and then suddenly it's in the past when interest rates were low, they could just refinance. Now when interest rates are higher, it's a lot harder, and if they aren't doing as much business, then they may not be able to get the refinancing, and so then they're in trouble. But generally, they'll try and just refinance. And so a lot of the company actually growth you start to realize when you deal with them is that it's predicated on debt. When I was an auditor at EY, I remember every single company, so these all listed companies, they all had debt, even though they were profitable, because they have this kind of approach that we'd rather grow based on debt than actually to use our own money. And it becomes a problem, and we're starting to see this. I was speaking to a brother who's involved in a utility company, a major utility company in a country, and the income is around £500 million equivalent a year, and almost 15% of what they earned every year had to go on managing their debt, right? Just on managing their debt. Okay. By the way, is the pace okay, guys? Can someone show me some thumbs or something? Am I all right for pace? Am I going too slow, too fast? Let me know. I've still got to tackle trading, but let me know. Nice. I like the thumbs. MashaAllah. Okay. Restructuring RX, yeah. Restructuring investment banking, right? So in restructuring, bankers advise companies, debtors on deals to modify their capital structures so that they can survive. They also work on bankruptcies, liquidations, and distressed sales. And they may advise the creditors, right, rather than the debtors on each deal. So this is, excuse me, they'll work. So the one who's in debt, but also the people who want to buy, they're kind of advising them on what to do. So just as there are sell side and buy side M&A deals, and it's in the name, people who are on behalf of the company selling themselves or on behalf of the company which is buying the other company, there are two sides in restructuring. So a company needs to be restructured, and distressed transactions. The debtors, the companies, and the creditors, i.e., the company which is distressed and can't keep up with its payments, etc. And then also the creditors, the ones to whom the money is owed, right? So you can restructure on both sides. Okay, the guys who are owed money, listen, we need to work on their side to restructure this debt because it's not coming in. Well, the company now, wait a second, you owe this money, you haven't been paying it. What can we do for you? A bank advises only one side in each deal, and so obviously, because if you're advising both, there's a conflict of interest, right? So a bank advises only one side in each deal, and some groups tend to focus on one specific side across all transactions. So they become, always on behalf of the distressed company. That's naturally they become experts in that. They will normally have relationships with financing houses and so on and so forth that can provide distressed debt, normally at a much higher rate. Any debtor that engages in restructuring companies, one of the following categories, right? So if a company is in that needs to be restructured, it's either stressed. So this means that, it's not just having a hard day. It's stressed. The company's still able to pay interest on its debt, but it may have trouble with an upcoming maturity, right? So repayment of the debt principal, or it may be heading towards a cash crunch. It's running out of liquidity, out of money. Yeah, cash for it. It's got assets, but it's running out of liquidity. So that's stressed. Yeah. So it's just about keeping up. You get this idea as head above water. Now, distressed. This is a company that has already defaulted by missing an interest or principal payment of maturity. It has violated a covenant such as the minimum EBITDA/interest requirement. So this means that, as part of the investment or money that it's owed, it's missed the payment already. And so it's in trouble, like it's really in trouble now, or it hasn't been able to pay its capital back, the principal back. This is distressed. And the third type is bankrupt. A company has already entered what's called a Chapter 7 liquidation or a Chapter 11 reorganization process and wants to achieve the best possible outcome. I've said company, but actually restructuring groups also advise governments and governmental entities that are facing similar troubles. Depending on how old you are, I guess you guys are probably quite young, but Greece was a country in Latin America where they were going to declare bankruptcy, and there's a lot of discussion at the time is defaulting and so on and so forth. So it can happen. Now, bankruptcy, there's this idea of owing money, etc. It's going to shut shop. What does that mean? Islamically, right? Just for us, just as a side note, what does it mean? What does bankruptcy mean? And from an Islamic perspective, what's the obligations for us? So this is quite important for us to understand. Jade. So this is corporate finance. Now, trading. This is, I guess, everyone wants to be a trader. We're good. Actually, should I just have a look? Have a look at some of the chat just to see if everything's going all right. Yeah, Greece, Birmingham Council going. Croydon, forget Birmingham. Croydon Council was declared bankrupt. Cool. Can't pay back there. Yeah, very good, very good. Alhamdulillah. Okay, so you guys are on it, mashallah. I'll keep to it. Just making sure everyone's okay. No one's flagging anything. Cool. So trading. So bankruptcy, you can see now, yeah? And you're actually, in often cases, you may be pushing the company towards bankruptcy because it's better to structure the debt and so on. And then you'll be working on who gets a priority of where any assets the company used to hold goes. The trading. Right. Different types of trading. Yeah. So we've got. Oh, this one I skipped again. Equities, ECC, we've got agency trading, prop trading, flow trading, all these terms, right? And everyone says, oh, I just want to be a trader. Now, it's even worse. When I was kind of entering into the financial market, when I really wanted to be a trader, you were thinking of these flash guys at that time, they just had mobile phones and they used to drive in convertible cars and terrible, terrible attitudes. But now, online, mashallah, you see everyone's a trader. I'm a crypto trader or a FX trader, and everyone's giving it that on social media. But when it comes to investment banking, and we'll talk to I won't say the noble institution. I don't think noble and banking are two words that you can use together. But when we think of traditional trading, it was done like this. You have agency trading, prop trading, and flow trading, and I'm going to explain what they are. Right. So agency trading. This is you execute orders for the client, and as it is, you're merely an agent doing what he or she wants and don't have much freedom. Right. So you're just an agent. Client tells you do this or do that, and you just execute for them. Prop trading, proprietary trading. You're the principal, and you can make whatever trades you want using your own money, right? Within your trading mandate and risk limits. So at the desk, you will have those. You can make a lot more money investing capital rather than simply earning commissions on trade. So with a agency trade, you will just get commissions. With prop trading, so you've got a book, you've got money, and you can place the trades as you want. And then based on their performance, you're going to be quids in. You're going to earn quids. If there's anyone who's not from the UK, quids is another way of saying money, cash, right? And then flow trading. Flow trading. This is a hybrid of the two where you have clients, but you also get to make some investment decisions yourself. So you'll have some clients, you'll do what they want, but also you're going to do what you want. Okay. Now, equity trading. These are deals with company stocks and their derivatives. Derivatives are financial instruments whose values are based on an underlying assets, right? So they're based on an underlying asset, such as a specific company stock or an index of stock. The simplest type, and I'm going to say some words, right? And I'm going to explain what they are. The simplest type is the option, which gives you the right, but not the obligation to buy or sell a specified amount of the underlying asset at a specified price within a specified time frame. A lot of word spaghetti there, right? So an option, I was actually discussing with them a number of scholars earlier today about structuring a type of Islamic transaction, and the trade was called an option, but it wasn't this type of options. And the sheikh kept on saying, "Oh, but you have the right, but not the obligation to buy or sell." We were explaining it's not these type of options. So an option generally it gives you the right, but not the obligation to buy or sell something, right? That's quite important. Oh, that says EC, so they changed that. It's actually supposed to be FIC, right? Is much broader than equities. So FICC is much broader than equities. I'll change that. And actually includes everything other than stock. So this is corporate and government bonds, credit-related derivatives, structured credit products, currencies, commodities, and more. In both areas, banks make money from agency trades and making markets for clients. So the agency trading, prop trading, flow trading, you can use for both FICC, right? Fixed income and commodities, right, as well as your equities. Now, most of these types of desks are split into cash versus derivatives versus exotics. The exotics is that type of all of these other types of structures. And the same split applies to equities and trading. Okay. Now, when I refer to cash, as I said, split into cash versus derivatives, cash means normal company stocks. Derivatives refers to call and put options on stocks, and exotics refers to derivatives that are more complex than simple options. Now, I've said three things there, right? Cash, right, which means normal company stocks. Derivatives refer to call and put options. Now, what does call and put on an option means? All it means, and I don't know why they use these terms. Honestly, I was in a meeting the first time, I remember when I first heard this, and they were saying, oh, we're going to put a call on it, we're going to put a put on it. All it means is buy and sell, right? Buy and sell, but they love to be difficult, try and make it seem as if they've got some special knowledge, right? So call and put options, all it means is one gives you the right to buy, the other means it gives you the right to sell. And exotics refers to derivatives that are more complex than simple options. So what I'm going to do is now explain derivatives, okay? Derivatives. Now, there's different types of derivatives, okay? We have a forwards contract. A forward contract is an agreement between parties to buy or sell an asset at a predetermined price on a future date. At the time that a forward contract is negotiated, right, both parties agree upon the price, quantity, and date that an asset is to be delivered. So let's break it down. I'm going to look at it even Islamically, right? So both forwards, here we go. A forward contract is the agreement between both parties to buy or sell an asset at a predetermined price. So they agree the price in the future. And at that time, the forward contract is negotiated. Both parties agree upon the price, quantity, and date that an asset is to be delivered, right? That's the futures. Then that's the forwards. Then we have futures. A futures contract is very similar. The only difference is that it takes place on an organized exchange. So forwards are individual, agreements between two parties. Futures is where they're an exchange. We were actually having a discussion with one of the exchanges, Chicago, and everything is organized within that exchange. That both parties are there. They'll have their use of brokers, agents to do all of it. You can settle it. Everyone's linked to the same system. It's done very quickly and very easily. So that's futures. Same thing, right? Options. Options is the right, but not the obligation to buy or sell something at a predetermined price, and in some cases at a predetermined time. In other words, an option lets you take the benefit from the upside of a forward contract while avoiding the downside, and this flexibility costs a small fee. So what would happen with an option? You pay money for the right to buy or sell something later. And what you're normally hoping for is that the market moves in a certain way so you can benefit from it. Now, you don't own it. And if it goes well, then you're going to then buy it and you've already agreed the price. So for example, let's take oil. Let's take oil, right? So say it's you want to buy an option that allows you to buy it for $100 a barrel. $100 a barrel, right? So you pay whatever price it is, and you're hoping that it goes up to $150 a barrel, for example. Now, because you paid that option, you have the right to then buy it for $100. So then you can then sell it for $150 at that time. Now, when you see this, can you see what it does to the mindset? It's like a gamble, isn't it? You're paying money in the hope that it's going to move in a certain way so you can then benefit from it. And these types of transactions are so much more than the real economy, the real types of transactions that are occurring. All of these is what makes up the bulk of trading now, like forwards, futures, options. It's not the actual underlying asset, but all of these contracts on top. So when we look at it, both forwards and futures permit an individual to buy goods that do not exist when signing a contract, right? So forwards and futures, at the time, There may be like, you know, you want to buy something that hasn't come into existence yet, or that isn't owned by the party that's selling it. Islamically, this is an issue, right? Islamically, this is an issue. I'm going to go back to Islamically. What are the problems, right? Even if the forward or futures exist at the time of the contract, they both allow the trader to sell the goods even before owning that property. Remember I said to you before, right? So you may have the option on something, or in this case, you've got the right to buy something, and you may just sell that without selling the underlying asset. You know, like they're doing short selling. This again goes against a fundamental rule in Islamic, in the Sharia, that demands a seller to have ownership of the object at the time of the contract. Islamically, there's a hadith the Prophet told us that you can't sell something you don't own. And this is really important. When you start getting into the murky world of trading and investment banking, and even any, you know, types of sales that happen globally, is this issue of milkiya, or real ownership. And one of the conditions of an Islamic sale is that both parties know what's being sold and what's being bought, right? What the exchange is. And now, because of these types of options and forwards and futures and derivatives, and all of them, some of them are combo and something even more exotic, you don't actually know what's going on, right? Forwards and futures allow buyers to resell the goods or set the contract obligations before actual delivery. According to the Sharia, physical delivery of the object must happen before resale or resettlement. This is an issue of qabd, what's known as qabd in the Islamic law within the Sharia. We can, there are ways actually now of what you would call constructive ownership. Because you can imagine that sometimes you may buy something halfway across the world, it's kept, so you buy palm oil. If I'm sat in the UK and I buy palm oil, and it's come from Malaysia. Allah Mubarak, Allah protect Malaysia. Is it that I have to get it all the way over here? I take it and then I send the ship back again. If I'm selling it, for example, to Pakistan. No, if I have constructive ownership where I can take ownership of it if I want to, I can commandeer that ship and bring it to Brighton docks. I don't know why I'd want to, but if I did want to, I could do that. That's the issue. That's what we mean by constructive ownership, right? As you can imagine, historically, that wouldn't really be a notion. You know, you'd have to take something into your hands. Here, as long as you can take it into your hands if you want. You've got paperwork that actually shows that it's yours. It can't be used for anything else. That's constructive ownership and meets the requirements of milkiya. So these three requirements: existence, ownership, and possession generally, and I've explained what we mean by that, are essential from an Islamic perspective. Right, so options. Options, are they allowed Islamically? Right, there is a presence of gharar, which is uncertainty in Islamically, and I'll you know, explain what that means. It contains elements of gambling, maysir, like I said to you before. You're hoping it moves in a certain way, right? So you're speculating, and so then if it moves in that way, your quid's in. If it doesn't, you missed out. And the price that's charged for options, like this cost, what is it? You know, so the scholars deemed it, the options have been made haram because one pays for something intangible, the right to buy, which cannot be considered as a subject of sale. They argue that there is nothing wrong from a Sharia perspective in charging a fee for such right. However, options trading in the stock market is subject to collecting fees for promises that are not permissible under the Sharia law. So generally the way it works, it's a promise and you're charging a fee for it. And the scholars actually said that this is impermissible. So, you know, and I'm kind of jumping around a bit, but I just wanted to say this. Look, you know, I'll go with trading first. Look, dealing in options, futures, and forwards. There are certain types of contracts that you can, what may look like a forward or a future or an option. You really have to understand Islamically what's going on, right? The Prophet ﷺ, he forbade double deferment. And if you do the Islamic finance course that IFA is doing on Saturday mornings, the 6-week course is covered under that around double deferments. The Prophet ﷺ forbade both values being deferred, so that either you pay now and you receive the stock later, or you receive the stock now and you pay later. but deferring both the price and the stock later is something that was impermissible. Now, when we look at modern investment banking, all of the way they do trades is impermissible, right? And so working in these areas is a issue, and I'll go into that in some more detail, inshallah. I'm just cognizant of time, and I just wanted to, kind of jump into some of these areas, right? Give me 1 second. I'm just going to pause for a second. I'm looking at the rest of the slides, just so I've got some time for you guys. Okay. All right. Jayed. Right. So I just want to read out this statement, and I think it's quite important for us to understand about, we go into kind of a technical detail of whether something is permissible, impermissible, etc. I really like this statement, statement on morality. And it's written by a non-Muslim. He said, people talk about compartmentalization, being a strict Christian at home, but during the day selling lucrative financial products to some guy at a small bank in Sweden, because this is who they deal with, who clearly doesn't understand what he's buying. The biggest compliment in the city is to call someone professional. It means you do not let emotions get in the way of work, let alone moral beliefs. Those are for home. In most conversations, the word ethics came up only in combination with work, referring to an almost absolute obedience to one's boss. The problem with the big banks is that not that they are immoral, it's that they are amoral. Their employees believe they only have one task, and that is to make as much money as possible for shareholders within the law. This is quite worrying because, look, we as believers, that's not how we behave. It's not about just meeting, shareholder returns, whatever it means, whatever the bank's rules are. That we know that we have an accountability to Allah Azza wa Jal, that of that wealth that we acquire for ourselves, but also the way that we help the organization acquire its wealth, right? And this thing about morality, or it's not immoral, they're amoral, and that's quite true about capitalism as a whole. Capitalism doesn't have a faith like that. It doesn't have an ideology. This ideology is just to make money, right? It's just to make money. So whatever sells, they'll sell it. Whatever they can do, whatever they can package up, whether it's junk bonds or, junk debt, they'll do it. They'll take something that's, rubbish and repackage it and sell it. Whether something is good or bad for people, they don't care. If it means rushing out vaccines because they're going to make money from their share price, they'll do it. And that's immoral, right? But they are behaving amorally. They don't care whether they're selling, cups of tea or coffee, right? As long as it sells, If you look at the rise of vegan food, it's not because more people believe in it, it's because there's a market for it. So, the companies respond to it. So, as believers, we need to start looking at actually what we do and how we do it. Because on Yawm al-Qiyamah, the Prophet ﷺ told us that the son of Adam, their feet will not move until they're asked certain questions, 5 questions. Of those, 2 are to do with your money. How did you earn it and what you did with it? So I just want to give some brief rules on kind of Islamic finance and how we understand it. And then I'm going to go back to re-looking at some of the earlier slides to see, okay, is it permissible or impermissible? I'll come back to this, right? So generally, how do we understand if something is permissible? So Islamically, there is a ban on riba, right? And I don't want to go, I want to make this an Islamic finance course, but there's a ban on riba. So we have to look at whatever we're doing, whatever role that we're doing, does it contain riba, right? And are we actively involved in it? Gharar, make sure that there's no gharar. And gharar is uncertainty, it's an unnatural type of risk. So not knowing what you're buying or selling, what's going to be delivered. This is all gharar. Speculation, gambling, maysir, right? Where effectively it feels like a a bet, a punt, right? A key form of what's permissible is risk sharing. Risk sharing and profit sharing, both parties in a financial transaction must share the associated risk. So it's not that, okay, one party takes all of the risk. So remember when I gave that example earlier of convertible bonds, right? That party, who's taking all the risk there, right? The party that's borrowing, isn't it? They've taken all the risk. The other party is taking all the, like, the upside, right? Without the risk. They're taking the upside without the risk. Okay, so risk and reward has to be shared. And Islam is so beautiful and just that it treats both parties fairly, irrespective of their economic power. They treat them both fairly on that in that transaction based on what they put in the transaction. Okay, Islamically, there has to be ethical investments. So you screen out anything that's involved. When we talk about industry groups, right? Industries such as alcohol, pornography, gambling, pork, these are all forbidden. So, the Prophet told us, La darar wa la dirar. No harming, no reciprocating of harm. And this is amazing, subhanAllah, because Islam came to uplift society as a whole. And that means the control of the markets and our economic transactions all reflect that these types of transactions are there to benefit and they don't harm people. When we look at what's happening in society and what the role some of these banks play and what they do, I can tell you, subhanAllah, um, I remember seeing a picture, subhanAllah, of these huge mounds of rotting wheat, like huge. And I'm talking like, if you look at something like the Excel Center or Wembley Stadium, but that entire size full of wheat, like grain, and it's rotting and it's really high. And there were children playing on that, right? And these were starving children from the slums. They're playing on it, but they're not allowed to take it to produce any food. Why? Because that wheat was being kept to control the prices of wheat. You remember when I spoke earlier about options and futures? And so if someone's placed a bet and they've bought them, they want to make sure that it goes to a certain price so they can sell them for profit or to control the prices of other commodities. SubhanAllah. So rather that people would starve than they give them that. And that's because of the financial markets. When you start looking at how the financial markets work, the price of oil isn't just based on the production that's pumped out, but someone sitting in an office placing bets on where the price should be. And so all of these people are placing bets on what the price and value should be, or placing bets on what the price and value should be. Excuse me. And so that will then drive the price of that commodity. Now, in oil is one thing. If you look at why it's so expensive for us to travel on planes, the average person, you and I, is because traders are making bets on it and they're increasing the price of it. I remember, subhanAllah, it's not just, and that statement I gave about immorality. Like, it's not just that what they do is kind of immoral or unethical, but the way it's prohibited, the way they go about it. I remember speaking to someone who is an oil trader, who's connected to an oil trader, right? And he's told him that this oil trader had paid off the security guards of a warehouse that kept oil and to know how much oil was coming in and going out. So then he would make trades based on that underhand information to see how much oil is kept at one of the main warehouses in the US. You look at that, subhanAllah, and then all of us, like the average person, thinks that they're going to get involved in this game of trading and investing or whatever. It's subhanAllah. And this is the key thing. You see, Islam came to remove oppression from our transactions, came to remove oppressions from our lives, from our dealings with each other. And this is a form of oppression that you can't see, subhanAllah. Now, you imagine the definition of dhulm, right? And people understand it as oppression, but dhulm simply means to put something in its incorrect place. And the Prophet told us, Prophet ﷺ, that dhulm will be darkness on Yawm al-Qiyamah. But it simply means to put something in its incorrect place. So, if you buy something at a certain price, right, because you have access to people who give it to you, or if you give them a bribe, and someone else who justifiably should have got it. This happens a lot in property dealing, by the way. brothers and sisters, where you will pay bribes to someone and then you can buy something and someone else is waiting to get their first home. And this person who owns 20 properties already, he's given them a bung because they've got money and they can buy more, etc. You've put something in its incorrect place. You know, when you think of something like jumping in a queue, you know, when you stand in front of someone, you've put something in its incorrect place because you've taken the right of someone that should have been there. These are small things that we should think about in our everyday, let alone when we're talking about finance. And I do another presentation on how actually oppressive finance is. If I have time at the end of this, maybe I'll play the video. And then last thing is asset backed. Each financial transaction must be tied to a tangible, identifiable underlying asset or service. There has to be something real that circumvents it. Now, when it comes to prohibition of riba, right? These are the ayah. You guys will know this, inshallah. You know, it's the only one in which the only sin where Allah tells us that Him and the Prophet are at war with those who deal in riba. Okay, so it's very serious. It's not simple. Again, this is important. Curse is the receiver, the pair of interest, the one who records it, and the two witnesses. From an employee perspective, the one who charges interest, so any department that's coming up with the product, anyone who's selling the product. So if you're a salesperson for a product that has riba, you're there. The one who pays is paid as a client, but then the one who records it, so the accountant, right, in that situation, who keeps a record of it, or the lawyer who drafts the legal contracts that requests it, they're all alike in guilt. And then this is important for us as well. You know, the Prophet told us the most beloved of places to Allah are the masajid, and the most hated places to Allah are the markets. And when we talk about investment banking, it's actually the financial markets that we're speaking about, you know. So look, this is generally in investment banking, there aren't roles there that I would ever, you know, recommend, right? So, you know, just because of time, I'm going to click through, just want to explain now a couple of things, and then see, okay, look, what we can do, right? How you can navigate this. So anything which is in front office, brothers and sisters, I would stay away from, right? You can see the type of activities that they do, right? The only one that may be something that you could be involved in is M&A, right? So mergers and acquisitions, or equity capital markets. Now, mergers and acquisitions, you have to be careful that you're not going to be recommending debt to the company that you're advising. If you're doing M&A for maybe a sovereign wealth fund, or you know, a company that's going to use its own funds, then that's feasible. Okay, and maybe I'll address the question people are saying, oh, can we work in it if we want to go on and do that? But generally, as a whole, these are areas that are impermissible. Middle office operations, treasury, risk, technology. The problem is, right? And the reason why I was saying this thing about company structure is often, so something like back office, so compliance, accounting, generally not compliance, even though it's back office, but at least accounting or general IT or human resources, they would have a separate company set up. They may offshore it. So they'll have it maybe in Philippines or India or wherever else. And they have a different company that just does that function. So you could argue that actually it's a role that's permissible from that perspective, right? That it's a separate company, but you're still providing services to these companies. But as a role, it's a separate company, and the work that they themselves are doing are generally not going to be impermissible. They're all going to be permissible. Risk and technology, the actual work itself can be permissible, but you're going to have to be looking at who you're doing it for, right? So, look, like I said, M&A, it can be, you know, the other stuff, stay away from it. Trading, again, look, unless you're trading with your own money, right? And you're buying and selling, and you're going to actually take ownership. This is your milqiyah. It's problematic because you're trading in derivatives usually, right? All of these are impermissible. So does that mean, oh my God, well, there's no way for us to work? This is the reason I had this slide up so everyone can see it. When we look at the largest companies by market cap, right? So you can look on there, right? Financial services is actually quite small, you know. Financial service is actually quite small You've got Apple there, 2.96 trillion, Microsoft 2.46 trillion, Nvidia, Meta, right? You've got oil and gas, you've got consumer discretionary, Amazon, Tesla, Toyota, healthcare, right? Communication services, we've got Google there. Google may, you would argue, could also be in IT, right? Financial services actually a small percentage, but we get so hung up on wanting to work there. You can get into very senior roles, right? Inshallah, in some of these other companies and earn very well without, you'd hope, without doing prohibited activity, we've got, just because we've got time, if it's okay, I want to share a video with you, brothers and sisters, if that's okay. It's only a couple of minutes. So give me 1 second. Just because we've got time.
Dermatologists are raving about Medicate's crystal retinol serum. I've been seeing it all over my For You page, so I wanted to.
That's not what I was going to share. Oh, let me skip that and then I'll put it on. Sorry, guys. Okay, give me 1 second. Let me make this full screen, and I want you guys to watch this video. Hopefully, you guys will be able to hear it as well. All right, sharing. Can everyone see a screen which says inequality? Show me some thumbs, guys. You've been good at this. Nice, mashallah. Okay, I'll turn the sound off. Let me put the sound back on. Start again.
People are talking a lot about inequality these days, about the fact that the richest 1% have so much more than everybody else. But most of the...
I'm just pausing it. Can everyone hear it? Did everyone hear that video? Perfect. All right, I'm not going to disturb you now. Let's watch the video, inshallah.
Focus seems to be on the United States. And it strikes me that the same story needs to be told about global inequality too. So I did some research, and this is what I found from reliable sources like the UN. It turns out that while the US is totally out of whack, things are actually way worse for the planet as a whole. Let's start with this graph. A perfectly even distribution of wealth among all living people, with everyone divided into 5 equal groups. Now, let's show how much each group actually has. Shocking, right? 80% of the world's people barely have any wealth. It's hard to even see them on the charts. Meanwhile, the richest 2%, they have more wealth than half of the rest of the world. Let's look at this chart another way. Let's take the whole world's population, all 7 billion of us, and reduce it to just a representative 100 individuals. Here they are. Poorest people on the left, richest people on the right. Now let's show how the world's total wealth, roughly $223 trillion, is distributed. The vast majority have practically nothing. Nothing with which to educate their children, nothing with which to pay for basic medicines. While the richest 1%, they've accumulated 43% of our world's wealth. The bottom 80%, meanwhile, that's 8 out of every 10 people, have just 6% between them. But even this doesn't really show how extreme things have become. The richest 300 people on Earth have the same wealth as the poorest 3 billion. So the number of people it takes to fill a mid-sized commercial aircraft have more wealth than the populations of India, China, the US, and Brazil combined. We can also see this difference geographically, with a huge and growing gap between a few rich places versus the majority of the world. For most of history, things were much more equal. 200 years ago, rich countries were only 3 times richer than poor countries. By the end of colonialism in the 1960s, they were 35 times richer. Today, they're about 80 times richer. Rich countries try to compensate for this by giving aid to poor countries, about $130 billion each year. That's a lot of money. So then why does the wealth gap keep getting bigger? One reason I found is that large corporations are taking more than $900 billion out of poor countries each year through a form of tax avoidance called trade mispricing. On top of this, each year poor countries are paying about $600 billion in debt service to rich countries on loans that have already been paid off many times over. And then there's the money that poor countries lose from trade rules imposed by rich countries to get access to more resources and cheaper labor. Economists from the University of Massachusetts calculate that this costs poor countries about $500 billion a year. Altogether, that's more than $2 trillion that flows from some of the poorest parts of the world to the richest every year. Rich governments like to say they're helping poor countries develop, but who's developing who here? This makes me think that there's something wrong with the basic rules of the global economy. It can't be okay that the wealth of our planet is becoming so concentrated in the hands of such a tiny number of people. The only reasonable response, it seems to me, and our only hope, is to change the rules.
Okay, so subhanAllah, quite hard hitting. And that video, when I first saw it a number of years ago, I thought it really encapsulated well the issue of what we're dealing with the global economy. And investment banks are at the heart of it, right? So you see every single investment bank has a department that does research into countries, and their only role is to look at what's the economic surplus of all these countries, and then they come up with ways in which they can remove that economic surplus, right? So they're actively trying to get wealth out of Muslim countries. They come up with structures that take advantage. You look at Africa and former French colonies, these countries, even though that they were given independence, when it came down to it, subhanAllah, they've got independence, but as part of their independence, the rules are that their money and their budget and their finances have to be governed by France still to this day, right? So all of their money is invested in French capital markets. Who runs the capital markets? These investment banks, right? And they are usurping the wealth of generally Muslim countries again. So that's these type of organizations. These trade rules, when they go in, banks, they go in and they fund, countries and their wealth coming out of it. I myself, subhanallah, I remember when I was at Deutsche Bank years ago, and I was working on a department, and I saw some paperwork with my own eyes that this bank, Deutsche Bank, had lent Bangladesh and Nigeria $1 million back in 1979. And both countries, this is 2005, had paid back in excess of $25 million, and they still hadn't paid back the loan, right? So they paid back over $25 million, and they still hadn't paid back the loan. That was only one loan from one department in that one bank. Do you think of all the other banks that are lending money, and then all of the other agencies? And this is what they're doing, subhanAllah. And this is the cancer of riba and debt and the enslavement. And so when we talk about careers and what we want to do, this is why I try and say it early, like investment banking, it seems like, okay, yeah, it's amazing, it's fun, this, that, and the other. That's where you want to be to earn the bucks. But think of what you're a part of and what you're facilitating, and this is the activity that goes on actually. So I know it's quite heavy, but I wanted to really say that. Okay, Bismillah. I'm going to close the formal part of what I'm saying there, inshallah. And like I said, I showed you earlier, there are other options. I'll do some Q&A now, inshallah. And then we're going to run a separate session on careers in Islamic finance and also what opportunities. I know some people asking me about working for Wahid, and I thought I'd widen that and try and speak about the various other roles that are available in Islamic finance. And also, if there's any other kind of questions people have around their careers. But I'll take a Q&A for now. Omer, do you want to maybe run that?
Yeah. Do you mind letting me share my screen? Is that okay?
Yeah, and is it still sharing the screen? Oh,
I
should have stopped.
I've gone ahead.
Yeah, cool. I thought I stopped sharing.
Can you see my screen all right?
Yeah, there's some blocks on it for me. I don't know if it's.
Is it? I think that's hopefully we can still go through it. Just for anyone who wasn't able to catch the vision statement, essentially, IFA, we're trying to build a world in which wealth building is divinely inspired, equitable, and seamless, with no one being left behind in the pursuit of happiness. And our services, which you can look at our website. But something that I forgot to mention at the start was we are running, and Ustadh Umer mentioned it through the talk as well, we are running a 8-part or 8-week series in Introduction to Islamic Finance. We're running something on the topics of the principles of Islamic finance. We've got student loans, zakat, we've got car financing, home financing, waqf, halal investing, and crypto. So that's currently going, and you'll have lifetime access to this as well. So please do sign up to that. I'll leave that up there for a minute or so while I pull up the questions.
Yeah, cool. I've got some good questions here. Okay.
You ready for the questions, Ustad?
Yeah. Bismillah.
Cool. So the first question that has come through is Brother Freak, he wanted to ask whether, in simple terms, how does Islamic banking claim to be halal compared to non-Islamic banking? As I understand that creation of new money paper from thin air is the key underlying aspect, along with interest or the cost of borrowing, that makes it haram. Under Islamic banking, how is new money created, and how is interest, speculation, or betting avoided or replaced? Jazakallah khair.
Okay. Barakallahu feek. Okay, good question. So the reality is, I'm part of a group that's very critical of Islamic banking as it's practiced today, because it still works within the conventional system. It's subject to the same issues of fiat money, so credit creation, except that they try and structure it so that there's an asset that circumvents the transaction, right? So Islamic banking is problematic because banking, by definition, is a for-profit based on debt institution. Islamic finance itself, though, the principles of Islamic finance are something that can be used to avoid falling into riba, etc. But Islamic banking, when we talk about lending, we talk about home purchasing, mortgages through banks. These are definitely a problem, and the reasons that you raised are the same, are an issue because of that. How do we, I don't know if you asked about alternatives. Alternatives can be done, but I think outside of the remit of banks. So for example, when we look at home purchasing, and we covered the course on home purchasing, but organizations like FIDA, Way Home, Halo, Crowd to Live, these are not banks, but they will enter into financial transaction with you for you to purchase your home in partnership with them, versus a bank which will have a structure that's essentially like a loan, right? So that's with regards to Islamic banking. Next question.
We've got a few questions on options and derivatives. So if you could quickly just go over, so is it only that options are permissible? And in summary, most of these derivatives are impermissible. And also, if trading involves uncertainty, then one can't guarantee a customer. So how is uncertainty different from gharar?
Okay, all right. So gharar. So if we look at wheat producer, the issue is about double deferment, right? So if you're producing wheat and you want to sell the wheat in the future, right? You will do the transaction. So one part of it, the obligation is created immediately. So you will say, I will sell the wheat now for this price, and I will deliver the wheat after it's produced. And then you come to an agreement on it. The issue is when both are deferred, right? So wheat producer can do this classically, like any type of stock. Say, okay, look, I'm going to wherever the harvest is, and the person wants to share in it. The issue though is if you can't produce that wheat, right? So there's a certain amount of gharar in that, and then you have to come to some sort of terms with the other party that you weren't able to deliver the stock, right? So that becomes an issue. Normally, what will happen is that classically people would share in the investment, or they would actually share, or they'll partake in doing whatever is required to produce the wheat, and then they'll share it when it's sold. So the risk and reward is shared. But today, and there are a lot of specific agriculture types of products and structures which we can cover. I was just focusing on this, but from the futures perspective or a forward perspective, you gotta fulfill one part of the transaction immediately. You can't defer both, right? And if you fix the price, then if you paid for it now, then it's not an issue. You can deliver the counter later, right? Or you deliver the counter later and you take the money now. The problem is when you defer both, right? This is a point that I'll pay you later and take delivery later. Then you have these things where you're taking much bigger gambles, right? And this is what was happening. This is what kind of led to financial crisis in the past. And you're taking huge. This is why they in the UK they split out investment banking from retail banking, because you had bankers, investment bankers, traders. They were taking positions in the future. They think, oh, I think it's going to move this way, so I'll buy this commodity now, I'll sell it, right? And because you think, okay, it's going to go higher in price, you're going to make money, but it didn't. And so you're kind of trading and gambling more, you're speculating, which creates more risk in the system, and that created problems. So Islam says you can't defer both values, right? Says only options permissible. No, again, it depends on the type of options that you have, and as they're classically understood, I wouldn't engage in those types of options. If you have the option to sell something, what you can do, and this is what we were discussing with the scholars earlier, is, for example, if I'm producing, I don't know, I want to use dates because that's a ribawi item, milk, and I say, listen, I'm gonna build these houses, and I'm gonna give you the option to buy the house if it's finished, if it reaches this value. So for example, if it's $1 million or £1 million, then you have the right to buy it. I can only do that if, first of all, I own the house that's going to be finished, and secondly, you can't trade that option. You can't trade the option. What's happening? That I'm just giving you the right to buy it. Yeah, that's a sales transaction. What we see in the financial markets is that this option that's placed on it, the right to buy it, it doesn't give you the actual underlying asset, but this intangible, the option, then becomes something that's traded separately, and that's impermissible. Trading. Oh, sorry, Omer, did you want to ask a question, or shall I just kind of fly through them?
Yeah, you can fly through them. That's fine.
All right, guys. Trading involves uncertainty, as one can't guarantee a customer. So how is that uncertainty different from qadar? So trading, let me understand what you're trying to say. Trading involves uncertainty. Are you talking about normal trading? Yeah, you want to explain? Like, because look, gharar is more than natural risk, right? It's not just uncertainty. It's unnatural uncertainty. So, for example, classically, the way gharar was described, or some of the examples given, was someone sells to another party. He goes, "I will sell you the fish in the sea," right? The person, I don't know if there's any fish in there, how many fish there are. This person's taking money from me, etc., right? That's a natural type of uncertainty. When we talk about gharar in insurance, for example, you're buying for something that you don't know will happen or not. You can't quantify it. Something like a customer, if you're trading, normal trading, I want to talk about investment banking trading. If you're a shop or a salesperson, someone comes in or doesn't come in, that's what you'd call a normal business risk, right? It's not an unnatural form of risk. And gharar, I would really recommend that you attend the course where Sheikh Sajid goes into it in detail about how to identify and what qualifies a gharar and how much gharar, because not all gharar is the same, whether it makes a contract impermissible or not. If you work within an industry like insurance, for example, but your role is middle or back office like technology, HR, etc., would you say the income from that is permissible or not, given the industry the role operates in? Okay, so working in banking, working in banking, subhanAllah. Okay, so look, I spoke to various scholars over the years on working in banking. I used to be in a bank. I never wanted to. It just ended up that way. And I've kind of got three views. One view was it's haram whatever you do for a bank, whether you're a cleaner or a security guard, it's haram, right? This type of view generally got from scholars who went from the UK, right? The other type of view I've had is that and this is from quite a senior scholar in the UK, that it's permissible for you to work in a bank as long as whatever you do it with integrity and honesty, right? You can work in a bank. Again, I think these are two outliers. The kind of mainstream view, and this is from a number of scholars that I think understand the context very well, they say depending on what you do for the bank would require the urgency of you leaving. So if you're in a role that's directly involved in riba and those type of things like selling or creating or coming up with ways to market it and so on and so forth, drafting the contracts, it's something you probably want to avoid and try and get out of as soon as possible, right? However, even in the Sharia, when I spoke to scholars, they said that the Sharia doesn't seek to harm you further. If there's going to be more harm in you leaving immediately, then it's something you should really try and hate and find a way out of and look for something else. If you're in another role like compliance and HR, etc., then there's not that immediate pressure on you to leave, right? But from your own personal perspective, ultimately, you probably still don't want to be working in an organization whose main income is derived from impermissible. Now, it's not always the same because there's different. This is why I said about company structures and where they actually do they get paid as a service fee, right? So, for example, if you're in, and I saw this with HSBC, HSBC would have its tech and operations. They were under a different company structure and they would just charge fees to HSBC, even though it's all called HSBC. But their income actually is a step removed. So you could work there potentially. Excuse me, sorry, throat's getting really dry. You could work there potentially. Give me 1 second. Sorry, guys. Apologies. Yeah, so working in those departments like that is not an issue. But I would say anyway, look, when you understand what banks do and how they do it, and riba being something which is so hated in the sight of Allah Azza wa Jal, you want to try and get out. And if you can't get out, hate it in your heart. This is the thing that we forget, and this is why I gave the hadith about working in the markets. The Prophet said the most told us that for Allah, the most beloved places are the masajid, and the most hated places are the markets. We can't allow our hearts to settle in these organizations, right? At least if you hate it and you look, then you have something to present to Allah Azza wa Jal. Then we say to Allah on Yawm al-Qiyamah, oh Allah, I was weak, I didn't have any options, and I worked here, but by your glory, I hated it. Versus enjoying it, getting in there, letting it settle in your heart, letting you be okay with it. We don't want that. We want to be like, this is terrible, and we ask Allah to forgive us for it. Okay, but the need to move out isn't immediate. Okay, how do you reconcile the ban on transactions involving risk with the idea of how we should be risk sharing with other parties? No, it's not that transactions can't have risk. There's always going to be an element of risk. What you can't do is buy and sell risk and you place all of the risk on the other party, right? It's got to be predicated on both parties sharing that risk, right? Based on their economic input and also their reward. You can't have one party takes all of the risk and minimal reward, right? And the other party doesn't take any risk and takes upside. And that's what riba is. And then you've got to find other ways in which that occurs. just because of time. What about M&A in a boutique that only does M&A and you're not employed by an investment bank that's DCM, etc.? Yeah, like I said, look, you can do that, but just make sure that you're not going to be part of that team that with M&A then has to go and secure the funding. So the skill set, we talk about skill set, that's, and private equity is the same, right? Private equity, M&A, right? Is you can do in terms of analysis, understanding. And there's a question around equity research. Yeah, look, because I was focusing on the actual kind of front office with this equity research, that's all okay, right? The actual role itself is permissible, but you just have to see what's going to be done with the work that you do and the industry that you're supporting. So uh, with M&A, if you're then part of that team or private equity where you've got then arrange the financing or be part of that team that does the leverage buyout, or you recommend it should be leverage buyout, it's a problem, right? But the skill set can be used in other areas. So you can use the same skill set, take it from the boutique, or maybe you can say to the boutique, I don't want to work in this area, or I don't want to work on that part of the thing, and subhanAllah, I have to say, man, look, Allah Azza wa Jalla bless all of yourselves for having this concern and fikr around doing this. I was contacted by a young sister. She had a graduate role for a really top American law firm in the UK. And she contacted me and she said, look, I want to tell them as part of my rotation, I don't want to work in any part of the firm that's going to deal with interest. SubhanAllah. And you would think most people are just, I just want to get into that firm. I'll do whatever it takes. But she was firm on it. And I said to her, look, do you generally have the choice of choosing where you want to go? She goes, yeah, 8 times out of 10, you'll get what you want. I said, don't raise an issue now. If you have a problem and they put you into that department, then we'll tell them on a faith basis you don't want to work there. But she had that figure in the first place, right? So the same thing, if you're going to be working in these firms, if you can build that relationship so you don't work on that part of it, rest of it you can do. Can it not be said that working for a bank in any capacity is helping to establish a ribawi economy? Are scholars divided on this? No, it can be. Of course it is. It's ta'awun lil udwan, right? It is enjoining in something that's evil, but that's not the thing, right? Like for you guys, somebody who's not in a bank, don't enter it. Don't work in it. It's going to be harder for you to get out. That's clear. But if you're already in the bank and you're already doing a role, depending on the type of role, we have to look and see what does the Sharia tell you. It's easy to say, oh, stay away from it. But if it's going to create more issues for you and your family, does the Sharia give you some flexibility in terms of how to maneuver that? Does it give you some time to find something else? And so on and so forth. This is how I ended up working in a bank. I used to work in KYC, right? So this is financial crime due diligence. And originally they were going to set up a separate company because it's not part of the actual doing the business, etc. They were going to set up a separate company that was made up of a number of different organizations that did this for all of the banks. But they didn't end up doing that and they kept it within the bank. And I was there. And then I was trying to get out, but it wasn't easy to get out. And so this is why I started to seek advice. So I'm with you guys. The best thing is to not go into it in the first place. And this is why I'm saying that look at all of the other companies that are there. It's, subhanAllah, there's so many options. If you get into it, it's so much harder to get out. If you had to start your career from scratch today, what industries, companies, job roles would you target? And what areas would you upskill in? Very, very good question. I would definitely, I enjoy risk, right? So I think working for a consultancy or the Big Four is a really good start because it gives you a really good foundation. They really invest in your training. They invest in your ability to engage with others. So it's a good foundation. I would probably do more stuff on the tech side, technically, like around information security and around data, because that's only going to grow. In the last 10 years, I pivoted from pure risk into technology risk. If I was to go again, I would definitely try and work in cybersecurity or data, because that's just going through the roof and companies are going to need that more and more, right? So that's what I would probably do. Would quant roles or more data analysis roles be a halal way where trying to make a calculated approach to the markets? You can do, of course, right? The role itself is fine, but you have to see who you're doing it for. That data can be used in a permissible way or an impermissible way. If you're working within the organization who use that to then do trades, etc., that would become an issue. You mentioned that Hadith about those who record interest are punished. Does this apply to accountants? I don't want to make it too. Look, it's if they're the ones who are recording and making sure that you charge the right interest from a financial management perspective, then yeah, unfortunately, subhanAllah. What steps should I take as a first-year university student to get to a similar place where I am now? Oh man, I'm not an example at all, subhanAllah. I would say work hard, get your grades, get your results right. It's really, really important that you try and do that because it opens a door for you. But search excellence. I keep on saying this, like, don't stop at just doing your degree or even when you start your career. Like the early part, even now to this day, subhanAllah, I hardly have a weekend or an evening, right? This month alone, I've been traveling. You know, I was in Turkey, I was speaking about finance, then I was in Qatar, then came back, I was in Manchester, then I was in Doha again, then I was in Denmark. This weekend I arrived yesterday and I was doing a course in Denmark, subhanAllah. I'm teaching a lot of these now, but before I was attending these courses and I was attending conferences and I was trying to understand what's going on. And I'd go into these meetings and I'd go into these workshops and I wouldn't have a clue what people are talking about. You know, it seems as if everyone's talking a foreign language. But then after a little while, I started to understand a little bit. I started to understand, well, that's what they're talking about, or that's what they mean. And that's just, you know, something you got to invest in yourself alongside investing in your kind of general education. You have to underpin it with Islamic education. You really have to. I always say this to young people, ensure that you're connected to something greater than yourselves. Be part of a regular class, be part of regular study, because ultimately your Islamic underpinnings are what's going to help you navigate all of these things when you understand the principles. For me, I went on Sabil and I studied the key principles and I'd spend time with the scholars and I'd search them out to sit with them and I'd spend all of this time to help me. So definitely do that. I'd also say really try and seek internships. Do whatever you can. When I was at uni, I worked the entirety, well, I remember my second year, and the entire summer, I worked 7 days a week, right? I couldn't get an internship like everyone else, but I managed to get one with Deutsche Bank because I knew someone and I asked them and I said, I'll do it for free. So I worked Monday to Friday for free, yeah, just so I could get it on my CV. And to fund myself, I'd have to work weekends. So Saturday, Sunday, I'd be working to get money to be able to fund me to be able to go to Deutsche Bank. And I did that, you know, for 3 months over summer, subhanAllah. But then it made an absolute difference when I graduated. I had something on my CV, you know, to really try and seek experiences, inshallah. Is it permissible to have a compliance role, data protection for a price comparison website which facilitates the sale of insurance products, mainly cars, some financial services products, loans, credits, cards, etc.? However, the main income for the business comes from energy switches, mobile contracts, and broadband. Yes, inshallah, I wouldn't stress too much about that. Are solicitors needed in Islamic finance? I started studying law a few years back. May qualify soon, inshallah, but I've also been interested in working in Islamic finance in some way. Yeah, for lawyers, alhamdulillah, Islamic finance is a large, massive area. A lot of the main law firms, really good law firm for Anstey. You've got Norton Rose, Clifford Chance, Sims, all the major law firms, Allen, Overy, they will have an Islamic finance department. Why don't we see more Muslim or Sharia compliant fund managers? Yeah, we should see some more. I guess because the choice of funds are limited. We need to have more products, guys. What would your advice on opening up a business in the halal way? Make sure that the source of capital is halal, that you consider all of your stakeholders, that the underlying business you're doing is permissible, how you do business is permissible. Take some time out, really. Umar ibn Khattab radiallahu anhu said, learn before you lead. Spend some time actually, man, learning fiqh of buyu, like really, wherever you can. And this is why I keep on saying, study the Islamic principles. And you know what's really important? I have to take this point to say this. You know, sometimes we can jump straight into the rules. And in the Quran, Allah Azza wa Jalla, when He talks about in Surah Baqarah about riba, the prohibition of riba, and the rules around the prohibition of riba, the preceding kind of verses, so just before all of the main verses of riba, the preceding verses are all about sadaqah and being connected to the hereafter. And it's as if Allah Azza wa Jalla is preparing us that our relationship with money shouldn't be one that consumes us, but be connected to the hereafter. Think about the hereafter. Wealth is something that you own, it doesn't own you. And once you get past that, here are the rules. Because when you just look at rules without the spirit, for want of a better term, then you can still commit oppression, right? By applying the rules in a very black and white way, right? But Islam, and the more, despite saying this about being technical and like knowing, like, the rules and knowing how everything works, ultimately it comes down to you as a person of taqwa, how you navigate this, because you can still be unjust to someone if you're following the rules, if you think that you're applying those rules in the correct way when you may not be. And I'll give you one example. In Islam, precedence is always given to contract. Ijab and qabul. If someone accepts something that you offer and they accept. So you're paying a person and you offer them a salary. Say you're paying them £30,000 a year. And you told them, and they said, okay, I accept. And somebody else who's doing exactly the same role, exactly like for like, similar circumstances, you're paying him 50,000. Technically, you haven't done anything wrong because he accepted. But as a person of taqwa, as someone like you'd think of justice, you'd feel, I know I only paying him 30 because I could get away with it, and this person I couldn't. And so you choose to pay this person more. That may be a form of oppression, right? And that's why you've got to have build up of your character. And there's a beautiful hadith of the Prophet ﷺ, where he said, "Al-birru husnul hulq, wal-ithmu ma haka fi nafsika, wa karita an yattaliya alayhi nas." Al-birr, righteousness is good character, and wrongdoing is that which wavers in your soul and which you dislike people finding out about. If you find that you can't be transparent about what you do and how you do, then there is an issue that perhaps you may be doing something wrong. Jade, okay, just because questions. Okay, are you guys all right? I'll just finish these questions. I'm just aware of the time. I don't want to long it out for you guys too much. I'll try and be quick. Does this industry involved with media and communications too? I'm a media and communication student. I have an interest with advertising and opening up a part-time business. How would I go with this career path, goal in a halal way? I still want to have a good career with the industry, but I want to make it halal for me. Yeah, of course you can, inshallah. Just making sure that you obviously don't work with companies that are advertising something that's impermissible, and you do it in the right places. You don't also use the wrong places to advertise, inshallah. You can help shape, and also the actual the way you advertise. So for example, in Wahid, I'll give that as an example, just so people understand, because try and be real about it. We try and say that, okay, you can't have certain type of music, we won't have a celebration of other like holidays on there, or we'll try not to reference things. It's not easy because sometimes you're dealing with new areas and different markets look at things differently. So we try and put some rules around it. You'll have to have those types of rules that you're not willing, for example, is gonna say, oh, we want to advert for Halloween. Like, how are you going to navigate that, for example? Yeah, okay. Once, as you say, once you get in, it's hard to get out. I've worked in operations in an American investment banks for 15 years. I've even taken Islamic finance courses, still struggling to get out. What other industries would you suggest where I can use transferable skills without starting at the bottom of the chain again? Oh, it's tough. I mean, look at maybe consultancy. Maybe what you should try and do is sidestep into a consultancy that does consulting to banks. So you're a step removed. And then once you're in that consultancy, see if you can move into another department, right? Look at other industries. I mean, to be honest, most of the guys I've seen, they've moved into consulting, or they've moved into like data-based industries. Good friend of mine, he worked for Citibank for a number of years. Then he moved to Refinitiv, Thomson Reuters, see Bloomberg, right, around somewhere like that. You can work in those. Or tech companies. I know another person who's in M&A, they moved to, instead of financial institutions M&A, they moved into technology M&A. I know it's not an easy, please forgive me, I'm not belittling the difficulty of it. Wallahi, I'm not. I know it's very, very difficult. Let's pray Allah makes it easy for you. Honestly, it's not easy. I understand that pain. And just keep on making dua, inshallah, and keep on trying. Ultimately, that's all you can do. So just because I'm saying it quickly and don't think that I'm passing off on it. It's a very serious thing. And I know it's pressure, and I know people feel these things and they're going through difficulty, may Allah make it easy. In financial crime, there is a bias towards detained crime demographics in the scrutiny, such as name screening, etc. Would you say this should be avoided? Man, it's very difficult, subhanAllah. Financial crime, if you're in a situation where you can impact it, then you should, right? Unfortunately, the financial system is subservient to the political system that we're in. Sanctions, when you're dealing with sanctions, why should we sanction Sudan and Iran and these other countries? Because the US doesn't like them. But unfortunately, that's the rules that they apply, and we've got to apply those rules. If you're in a situation where you can be discerning and you think just because someone is called Umer Suleman, right? Please don't blacklist me, right? You think, no, wait a second, I know Umar and he's all right, rather than, oh, sounds like I'm Islamic, let's block him. If you're in that position, Sheen, then try and make these changes, and we should really use our roles to educate those around us for it. Salams, I work in M&A for a small boutique. We predominantly work on the sell side transactions. Do you think that this is a problem or something I should look to move away from? And if so, what do you recommend? Ooh, very long question, very long answer. Actually, it's not as easy as just do that. If you're selling, then actually it's better than the buy side, because actually how they come up with the finances is up to them. You're trying to package the organization to sell. I would say stick at it for now. You can then look to see your skills. I don't know how long you've been working there, but upskill at it, become good at it, inshallah. And then you can look at maybe working for one of the larger sovereign wealth funds, etc. But if you're on the sell side, I think you may be okay if you're in-house, if it's a small boutique, right? Inshallah, inshallah. But do, if you want, connect with me on LinkedIn, by the way, guys. If anyone's got a specific question, for that didn't answer it here, I'll try and answer it on there, inshallah. Ustadh, assuming we have a number of finance professionals, is it worth advising attendees to help establish an Islamic economy? Of course, they must do their DD on certain companies. Yeah, 100%, 100%. Look, you know, when it comes to Islamic economy, and look, one of the niyas that I took upon myself when I started work at Wahid wasn't just working for Wahid because of their products. Their products aren't all completely Islamic, by the way. I have issues with their products, right? But I really wanted to be part of an organization that we can create a financial institution that is global and that we can employ our brothers and sisters, tomorrow my kids, your kids, etc. That they don't have to work in permissible environments. But it comes down to how we treat it and whether we support it. And, you know, it's sad sometimes that have conversations, and I have to be very careful about how I say this, that someone's willing to pay more, or just because another non-Muslim institution is able to make it like, you know, pence cheaper, they'd rather go there than supporting an Islamic organization. And wallahi, Allah is my witness, I try and do this in my own life. If I see that there's an option between two, and there's a Muslim organization and a non-Muslim organization, even if it's a little bit difficult, even if perhaps it's not as good, I try and support the Muslims. Why? Because we need to make sure that our money circulates within the Muslim economy. I think there was a study that was done around the time that money stays within a community, and it's looking at the US, and they looked at the Black community, and they looked at the Jewish community and a few others, and they showed that, you know, in the Black community, money stayed. It was like literally minutes, like, you know, like less than an hour that it stayed within the Black economy. It came into the hands of a Black person, and then it moved out of the Black community. And within the Jewish community, it stayed years. So it went from one Jewish hand to another Jewish hand to another Jewish hand, right? I'm just talking about now in the UK, we have like the pink pound, they call it, you know, if you're from an LGBT background, right, that you only spend, or the green pound, etc. When it comes to Muslims, why is it not that we are circulating our money within the community? And this is on both sides, by the way, brothers and sisters, yeah? Not just from our perspective of circulating wealth in the Muslim community, but people who have businesses should take this amana that they want to deliver good quality products and services to the Muslim community, and not cut corners, and treat it as this, have ihsan in what we do. So there is definitely us coming together and trying to support each other and holding each other to account, definitely. For companies to be halal according to IOFI, it looks at less than 5% revenue being from haram sources. To qualify as haram, what about for pre-revenue? A lot of startups or companies being pre-revenue, their revenue portion gets flagged as haram due to interest being magnified and blown up due to having no other revenue currently, as right now they're raising cash from private investors. Yeah, you'll have to look at a case-by-case basis, Usman. I know this, if they've borrowed or they're heavily leveraged, that's a different that's a different ratio that's applied. On a case-by-case basis, you should take it to scholars. IOFI, that's for established businesses. If it's pre-revenue, then you'll have to look at other factors. Am I allowed to work as an actuary within insurance, general life, or pensions? If not, where should I look at to pursue actuary as a career? Really, actually, insurance is an industry that it's no good. As an actuary, maybe you can work for mutual or takaful funds, Islamic takaful. Look at doing that, or the role of actuary actually is data, isn't it? Data analysis, if you think about it. Could that not be done for any other organization outside of insurance where you provide your services and insurance is a company that uses it? So rather than working within the belly of the beast, you're removed from it, one step removed from it. Allah Azza wa Jal make it easy. There's no quick answers to some of these. I wish, wallahi al-azim, I wish we had, Muslim businesses and large ones that were professional, that could take all our talent like yourselves, but we don't, but we have to work towards it. And we pray, inshallah, that it comes from people like yourselves, I used to think of, please forgive the example, but I'm saying that myself. I sometimes used to think when I was working in banking, I felt like Musa alayhi salam in the house of Fir'aun, that amongst all this evil, but it's got to have a purpose that I want to be able to fight, and which is why I wanted to start working in organizations that will fight riba, coming from within, and for yourselves, those of you who are inside the belly of the beast, then think about ways out. And those of you who aren't, inshallah, you're protected from it, but we've got to think of how we can use our wealth, use our intelligence, use our all of the blessings Allah has given us to try and create alternatives. Jazakumullah khair.
Ustad, I had a quick question, if that's all right.
Oh, go on, Omair.
Yeah, so if a company doesn't pass the IOFI or the Sharia on the business screens, would you advise against working for them if that has an impact on your salary?
No, it depends. Again, it depends on the type of role that you're doing for them. And you'd have to use it on a case-by-case basis. You can't just use IOFI as a standard thing. You'd have to look. So, for example, look, you may be working for a company that's heavily leveraged. Yeah, it's got a lot of debt. Yeah, but the activity of the business is permissible. So you can't invest in that company, but you could work for them. And that's a management decision. So it's got to be done on a case-by-case basis, inshallah.
Right. Jazakallah khair, Ustad. Thank you for that. I think that brings us to a close. Jazakallah khair for attending, and may Allah bless you all for your attendance. And Jazakallah khair, Ustad Umer. May Allah bless you, preserve you, and grant you Jannat al-Firdaus.
Jameen. I mean, when's the next session?
So the next session is on the Wednesday, 29th of January. And again, please do check out the IF course. We're going to cover lots of things, lots of topics on that, car financing to zakat, home financing, everything's on there as well. So quite a lot of the questions are on that. And a lot of the questions, they were on getting into Islamic finance. So that's going to be covered in the next session, part 2, which is again on the 29th of January. Yeah, please do follow us on the IFA WhatsApp channel. All of our publications, our activity, future events, webinars, podcasts, everything will be on that. But inshallah, we'll leave it there. Ustadh Umer, do you have any final comments?
No, Jazakumullah khair. Look, may Allah Azza wa Jal bless you all. May Allah Azza wa Jal purify your wealth. May Allah Azza wa Jal make things easy for you and your family. I know it's not easy and this is difficult. And you always have to remember Allah Azza wa Jal is Ar-Razzaq. Risk belongs to Allah. Allah Azza wa Jal is the one who's going to guarantee your risk. It's not working for these banks. They don't underwrite what you're going to have, right? So don't ever be afraid of that. The certainty with which the angel of death will come to each of us, whatever Allah has destined for us is going to reach us. Allah didn't want it for us, it's never going to reach us. So don't break yourself, don't tie yourself, don't stress yourself with thinking about what you're going to do and how your money is going to come. All you concern yourself with is that whatever you do, you want to do it in a manner that's pleasing to Allah Azza wa Jal. And wallahi al-azim, by Allah, I swear that when you make the hereafter your concern, the dunya will chase you. And when you make the dunya concern, then not only do you gamble the hereafter, you also gamble the dunya. So Allah bless all of you, inshallah, and look forward to the next session. Jazakumullah khair.
I mean, Jazakallah khair for your beautiful du'as and comments. Inshallah, we'll end it there. Subhanak wa bihamdik. Ashhadu wa la ilaha illa ant. Astaghfiruka wa atubu ilayk. Assalamu alaikum wa rahmatullahi wa barakatuh.